well, it's nice to be here in person. I was thinking like this, and I'm not very good at there. And I said, I'm not calling. And for those of you who've seen, again, I'm Sarah Katowski, I'm the graphic instructor. I've been with them now 9 years. Prior to that, I had 10 years in industry, CFO with Emory Clinic, and then CFO was at Newark Hospice Atlanta, which was corporate compliance officer. And then I spent 10 years at our producers. So I've kind of pretty much done a lot. I've pretty much been the whole time. The last 18 months, I've been living and breathing for our relief fund, CARES Act, PPP loan, and now the PRF application. This is going to be very high level. This is going to be way up here. I'm going to try not to talk too fast because I have lots to cover. But feel free. I will have business cards here. Feel free to reach out to me, ask questions, etc. Whatever you want. I gotta head back, stop off and see my daughter go to Southern and head back to Atlanta. But I'll be able to answer questions, email, etc. Just to get a sense of in the room, how many people have to file under provider relief before they have to file? How many people filed period 1 reports already? I know you did. I'm sure many of you did. So yeah, so just to get a sense, oh, even better. I am thrilled that we keep getting more and more people in here. So we're going to talk about period 1 reporting. Most of you have already completed it. We'll talk about, because these same requirements and information will be for period 2, 3, and 4. And based on, and we'll cover a little bit about phase 4 and the ARP payment application that's going to be due on October 26th. So that will be phase 4, and phase 4 will have to file similarly to provider relief. So all of this is kind of helpful, encouraged, but I'm just going to fly through this, ask questions, stop me as needy. I'd be happy to go off on a tangent if you have specific questions. Okay. So, just as a reminder, we now have a provider relief report. The funds received that you first reported on was from June, from basically the June, July, kind of through June 30th time frame. And now the next period will be coming up, and that report will be filed as of March 31st. So every March 31st and every September 30th, you need to make sure the month of March and the month of September is not full of vacations, because that's when you're going to be doing your reporting these days. But for the first period, they actually gave us a grace period. Don't expect grace period. And one of the things I want to clarify for those who may have not filed yet, or if they ever give us a grace period again, grace periods do not represent extensions. So just like the IRS extends your tax return and lets you file with an extension, this was not an extension for the HHS. This was just a grace period. All they said is we will not come after you for money or to show that you're, to try to revoke your status. However, you are technically not in compliance if you just file on September 30th. Technically, even though they suggest. But bottom line is grace period ends November 30th. So if we haven't finished, you better get moving on. There is lots of stuff on the provider relief website. And if you're like me, I'm on it every morning at like 7, 8 a.m. They tend to publish all new stuff at 10 a.m. or 2 p.m. So I'm always surprised by someone said, did you see what just came out? I'm like, I'm sorry, it's nothing new. Or they tend to publish new FAQs and new guidance that right before a deadline, it tends to change what we thought we were supposed to do. So all I would suggest is if you take certain things off of the website and you go with them as your guidance in terms of what you're allowed to spend or how you're going to claim lost revenue or what you're going to do, save a copy. Save a copy of that FAQ. Save a copy of that guidance, because they've been known to remove guidance, delete guidance, change guidance, reverse it, and then put it back. So if you need a particular version as to when you spend the money or what you did, tell me. I've been saving the FAQs since day one. I have them all dated. So just in case you need them. But there's lots of good resources out there, and old webinars and other things they've done. One thing to remember is there are lots of different funds. We have targeted funds and we have general funds. And we have these special ones, these infection control funds, and they separate those out. And you will see more of those infection control funds that we will file in period 2, 3, and 4. And those were those quality incentive payments that the nursing homes got, and we don't know if they're going to be more of them. But that's just one of the things to understand, that under the provider relief, it is general funds, targeted funds, and also these infection control funds. And the infection control funds have to be spent for infection control. Don't just assume you can use them however. The one thing that we did find out under phase 4 should be just like these provider relief funds that we reported on for period 1, is what they're saying right now in the terms and conditions. However, this was not yesterday's webinar, but the webinar, the most recent one, related to the ARP rural payments. There was this tiny little note in the chat box, and you didn't happen to notice it, but someone asked the question, is the reporting requirements the same for phase 4? And they said, yes, the reporting requirements are the same for phase 4, but we're not sure what the reporting requirements would be for the ARP rural payments. And we said, oh, you're not kidding. We hope that they're going to be the same, but just in case, they might have added a little extra flavor to those rural payments. They do not apply, all of these do not apply to those of many of you who might be revenue cycle folks. None of this applies to the uninsured claims and those testing portals, and that's kind of those claims that you're submitting under those 2 different funds. However, those funds come into net patient service revenue of our organizations, and they actually get reported as part of our net patient service revenue detail in that detailed patient payer categories. So if your CFOs and directors of finances are calling the revenue cycle people going, I need all the details and all the claims that we've spent related to, or all the claims and payments that we've got under uninsured claims, that's why they're asking you for it. Because they have to make sure it's included in our provider relief reporting with that patient service revenue, but also for those who are about to go through a single audit for the first time, it has to go on the schedule of expenditures for federal laws. And a lot of you are living in that new world going, I don't know what a single audit is, and there's just a lot more focus on revenue cycle because of provider relief funds, because not only is it on the CFO, but they're also going to be testing about balanced billing and how the bills work, which is not something you're used to having to tested and challenged on. Now, the one thing I will say about provider relief, if for some reason you haven't reported before, or you haven't gone through the registration process for provider relief period 1 or any of the other periods, make sure you complete that registration process, make sure you figure out what your tax ID is going to be. But the best part about provider relief, as long as you know your username and that email and that tax ID, you're pretty good. Even if you didn't get all your tax IDs in the first time or the third time, you can always edit them afterwards. The registration process is not that hard as long as you have an email address, a username, and your tax ID. Everything else can be corrected in the portal. So, under the provider relief, we're just going to kind of walk through these high-level steps so that you understand kind of what we're doing. You're going to be reporting lots of data under provider relief. The first step is interest earned on PRF payments. So we got millions of dollars, or maybe thousands of dollars, maybe hundreds of thousands of dollars. Those funds, if they're kept in a interest-bearing account, we actually have to report interest to the federal government. But the good thing is we don't have to remit it to them as long as we spend it on the approved uses under provider relief. That's the good thing. The challenge is most of us dumped it in interest-bearing accounts along with our PPP funds, along with these other money, and now you're going, how do I estimate interest? You do the best you can. You just, again, they're not going to trip your calculations. You just do the best you can, and as long as you remit it, that's fine. Now, be careful where you invest it. We did have one client who invested it in more of a riskier profile, and they asked for us money on the money. and so they actually, that is not something that HHS says, oh, okay, you want more. actually had to return the funds and make up a difference because of that loss that they had. So put it in an interest-bearing account, a normal interest-bearing account, and then just keep track of those funds. It does appear when it takes more, you might want to make sure either you set up a separate account or you have it, because they seem to hardwire more about putting those funds in an interest-bearing account. So you might actually want to set up an account just for those funds to come into or move them into so you can track it more easily. Because I see we have written a little bit better guidance on it this time. The next part of what you're reporting on provider relief is other assistance received. And again, the language that you look at for provider relief, whether it's on the website or the forms, for those of you who are accounts in the room, it is not going to make sense because it's not written for accounts. It was not written for anyone. It doesn't make math sense when we look at it. But in other assistance received, this is everything that you receive that was not provider relief. So this is your PPP loan that you're going to disclose. These are donations that you may have received from donors, patients, etc. This is also where the testing money, the 49,461 that we got for rural health clinics, that very specific testing money for rural health clinics and rural providers, that will actually be pre-populated on other assistance received for your organization by using testing. But that's what you put in other assistance received. You do not report the uninsured claims, yes, Bob.
Would that also include the value of supplies and other items that were donated?
No, you don't need to do that. You will need to put some of that on your CFO, but you don't, unless you normally report donated supplies in your, it's a big number for you on your financials, but I wouldn't worry about putting that in here. I would make sure you keep track of that because you need to put it on your CFO and other disclosures, but you don't need to actually put the value of supplies on it unless you regularly report those on your financials. I would not go through that. Charles. But good question, absolutely. Because someone even thought about, well, what about all those meals that were donated for our staff?
Oh, wow.
You're gonna go run out and say, what's the value of that? It's really just, they wanna, a lot of the data they're asking for here is just, it's almost like information purposes. It's a little frustrating because this other assistance received doesn't go anywhere. It's just an Excel spreadsheet. This is where your SHIP grant is being reported. This is where your Georgia Hospital Association, ASPR grant was reported. All your local, federal, state government extra funding that you got. If you're at QHC, this is where those other grants get reported other than provider relief. So that's what's sitting on this other assistance received. Now someone said, well, wait a second, do I also have to report my expenses that I used to offset my SHIP grant over there? No, they don't go anywhere. In other assistance received, say you have $2 million of other assistance received, you should have a schedule somewhere in your notes that says, here's what I spent that $2 million on. It was my payroll for my PPP loan, it was some of these other funds, here's what I spent on my SHIP grant, but you should have another schedule of $2 million to support that other assistance in this first reporting period. And this is always, other assistance received is always based on the reporting period, through that, whatever date it is. Then you're going to say use of your SNF nursing home infection control distributions. When we say use of, just like in 3 and 4, use of is those are your expenses. Whether it's direct expenses, capital expenses, property expenses, use of, those are your expenses. And you're just going to have a schedule that is by quarter, calendar year quarters that show that use of funds. And then use of general and other targeted distribution payments. The next one, net unreimbursed expenses attributable to coronavirus. Now, it makes it seem as if when you go onto the reporting portal, you're going to go to all these steps. It won't let you go to all these steps because if you had, say, $5 million and you do step number 4, use of general, other, and targeted distribution payments, and you spent $6 million, they're only going to let you put in $5 million under number 4, and then they will give you an option to do number 5, but they won't let you report lost revenue. Because even though you have had lost lost revenue, they won't let you go to that next step because they said, well, wait, you already used all your funds. Even though for many of us as organizations, we want to say, we had $6 million of expenses and $10 million of lost revenue, and I want someone to know about it. So under the provider relief portal, the way it's set up is you cannot get to step 6 if you used up all your funds. Now, some organizations from a strategy perspective said, you know what, I'm going to save some of those expenses because I'm going to save them for infection control when I have to report for future periods. Or I'm going to consider filing FEMA. Or I'm going to use them for the USDA emergency rural health rate. And maybe I'm not going to claim them under here. So maybe if I had received $5 million, I'm going to claim $3 million of expenses. I told you,
Oh, no. I'm going to go check on that. I'm sorry, guys.
They do have a fighting strategy, so they just shut us down. But I will tell you this, and I'll give it a shot. Truly, you might want to check the provider relief website tomorrow because I gave a webinar yesterday and I gave doing this presentation today. So normally within 24 to 48 hours, they change something. So tomorrow morning, there's probably going to be something new posted on the provider relief website. And normally it will undo everything I've just presented. But when it comes to these calculations, so a lot of our clients said, okay, I have $5 million of revenue, and I have $5 million of funds received for period 1. $3 million, I have $6 million of expenses, but you know what? $3 million of those expenses, I'm going to claim in period 1. The other $3 million are supplies and other things that I'm going to evaluate whether or not I'm going to claim under FEMA, or whether or not I'm going to claim under USDA. And so they said $3 million of expenses, and therefore, since I have $5 million, of funding, $3 million of expenses, well, wait, I'm now able to claim lost revenue. I might not get my full lost revenue covered, but at least I get to tell HHS that I have lost revenue. And for some of it, if you weren't sure from an optics standpoint, period 1 is going to be the first, the biggest reporting period probably, for this whole provider relief. So we wanted to make sure that, everyone presented kind of what happened to them during the time. So that's lost revenue reimbursement. It doesn't always get reported if you're going through the process. Okay. So as you look at your funds, it's critical that you know the date of when those funds were received. So I know funding comes in, sometimes it just shows up in your bank account. Especially in revenue cycle, you're just like, oh, we got $10 million. Or we're see those problems. Did you get $10 million? We're looking for it. It is very important to know the date. Because if you got it on June 30th, it already had to be reported on. If you got it on July 2nd, it's going to be reported on next March. So be looking for funds. When we talk about phase 4 and the ARC payments, those payments are going to be coming out, we think, in mid to late November for the ARC payments and mid to late December for phase 4. Note that drops you into period 4. So as you're finishing this application and going to submit it by October 26th for the next round, you're going to receive it in this last time period, and you're going to have to use it before December 31st of 2022, and you will report on it as of March of 2023. If someone asked me 18 months ago, would I be looking out to 2023 on provider relief, I never would have believed it, but I'm going to be living in provider relief for a while, and many of you are too. So, one of the things that has come up a lot is, what can I use one provider relief funds for? And guidance has changed. And if anyone has been doing construction projects, you probably had a few minor heart attacks throughout the course of these 18 months. Yes, you know exactly what I mean. Because the first point they said, you can use it to expand and renovate and make, do these big construction projects. And if you spend $1 million today on that project, you can claim $1 million. Well, then in October of 2020, they said, oh no, you can only claim at most 18 months of depreciation expense. Well, $1 million versus 18 months of depreciation expense is a big difference. And especially I had a lot of people from our rural hospitals that never had money in the bank before and now have $5 million that they're supposed to spend to take care of COVID patients and COVID costs and everything else, that we're afraid to spend it. And then at the same time, on top of it, you couldn't get the steel, and you could not get the construction, you couldn't get the labor, you couldn't get approved for a CON in order to do whatever you wanted to do to your facility. So the FAQs have constantly changed, but right now, and hopefully they're not going to change because it's pretty much been put into legislation. You can use the funds for construction and you can claim the entire acquisition cost if, again, it relates to COVID. It is attributable to coronavirus. So that is why it's very important to have the narrative and documentation. It's nothing you have to submit now. You should document very clearly why this expansion of the ER, why your nursing homes had accommodations, why you had to change your radiology department, why you had to move this lab over here and relocate your office staff to another building, and why you had to pay the parking lot and what those costs are related to, and did it relate to COVID. Because you don't know what your financial single auditors will be testing and saying this is related to COVID, and you don't know what HHS will be asking for COVID. And if you didn't realize, they've already hired or contracted with bunches of companies for millions and billions of dollars to basically audit provider relief, program integrity, as they like to say. Those contracts have already been signed. And I think they were close to $500 million or more. And again, that was just working on my question.
Yeah, on the balance billing, are they gonna look at the certain terms? What did they say?
They're going to look at basically all during COVID. So I'm
Just doing the 2020.
yes, and going forward. So just I would
Even
assume.
going forward?
Yeah, I would, yes, because the terms and conditions are always about balance billing. So those balance billing is permanently in the terms and conditions.
Okay.
So you have at least through 2022.
Okay.
If your entity has received funds at least through 2022, you have to be in compliance with those terms and conditions. Or I would say for a long time after, just in case. All right, but one of the things that has recently been clarified in terms of what expenses you can use for, and again, this is my opinion based on what I've heard from HHS guidance and reading this stuff over and over again. One of the things they've said is you cannot include construction projects unless they're completed in your provider relief. Well, if you go into the actual language, and I think it's here, there's specific language in there that says, if you're able to, and I think I have it on this slide, if you're able to, yes, right here, so if you have tangible items, you're ordering PPE and other stuff, and it hasn't been received yet, you're not able to claim that. As long as it's a tangible item, not a service, but a tangible item. And I would, if you have that PPE, that CT scan, or whatever it is, I would make sure that you get some letter from the vendor that says that power PPE or that CT scanner is sitting in our warehouse, license number 12345, and that's yours. We just haven't shipped it to you yet. But on construction projects, one of the things they talked about in one of HHS webinars is they said, yes, you can count construction projects. You can't count the $1 million purchase order, but you can count if phase 1 is completed and phase 2 is completed. But if phase 3 is not completed, you can't count phase 3 under provider relief. So if you take that to mean as the whole construction project, you would not claim everything. I would suggest that you can claim phase 1 because you've been billed for it. You can claim phase 2 because you've been billed for it. You can't claim phase 3 because it hasn't been completed yet. And this is where they're making the distinction. For projects that are bundled service and purchase of tangible items that cannot be separated, meaning you can't separate the materials from the labor from whatever, then you can't count the full that says, here's how much is done. Here's how much is done, and we can separate out what that $1 million project is. I would include phase 1 and phase 2, but not phase 3. Does that make sense? Because everybody said, oh no, my he's not complete. Yes, but it's phase 1 and 2 done. Are all the equipment and the lobbying materials and furniture they bought? Do you have those? Count those. You can't count those that haven't completed yet, but everything else that either sitting in a warehouse waiting to be shipped or has been done. The design, the architecture needs, etc. Now that's just one clarification, because everybody said, oh, my project's not complete. No, it's if you can't separate it out. And the other thing is, it's not, as some organizations try to, they say, well, I paid my contractor, or I paid an escrow account $2 million. So I essentially paid the money out. The whole thing, we thought we had to have checks written. No, just because you gave someone $2 million to the whole of half the contractor, that is not money out the door. You didn't get anything for that, so you should not include that. All right. We talked about audits already. One thing to consider on lost revenue. So for those who had to file lost revenue, did you do actual to actual? Who did actual to actual? Anybody? Yep. How about actual to budget? How about other alternative methods? So it just depends. It just depends. Actual to actual works very well for some folks. For some folks, you had to be realistic that if you claim actual to actual, but that it's only as if you can compare apples to apples. And this guidance that they recently published, I think it was published, I want to say mid to late August or September. I mean, they published new guidance that said if you're going to claim actual to actual, you better be apples to apples. And that's a challenge if you're like, okay, do I have all the same providers? Do I have all the same service lines? Do I have all the same things between years? So that's actual to actual. Under budgets, I would suggest that you probably technically could not file under budgets. Because under budgets, you have to have a budget that covers the entire period of availability. And if you know, the period of availability for this time was from basically, whatever it was, January 1st of 2020 through June 30th of 2021. Normally, people don't have 18 months of a budget. And if you think about it, we're now going to have a budget through 2022. No one's going to be able to use the actual budget method because of how this technical guidance is written. It says that you have to have an approved budget prior to March 27th, which covers the entire period of availability. We're never going to cover the entire period of availability. We can't do it for 1 year. Now, we've had several clients that said, look, I have a budget for at least 12 months, and they're actually going to calendar year, but I can't claim the rest of it, but I don't have losses in those months, so I'm comfortable claiming the actual budget. And they wanted to file that way without having to do alternative method. Because we know go to the alternative method, it's that whole increased likelihood of an audit. So that's just one thing to consider. Now, I'm hoping they're going to clarify this issue. We've, since the beginning of time, had emailed and reached out to HHS trying to say, this doesn't work. Hopefully they're going to address this for future time periods. If not, this option, the way it reads right now, it's not, we're not eligible to do it. If you want to read it technically. Then the fun one. Alternative reasonable methodology. Under this language, this says if you added a new service line, or maybe reduced a service line, or you had major changes going on, anything that changed, like we know one organization had a major flood. So they had to do alternative reasonable methodology because you can't really compare prior, you can't compare budget. We also had clients that went through system conversions in 2019. So 2019 was a miserable year. Why would I do that? Various things happen. So you need to think about this alternative reasonable methodology. Now, they put this out as, hey, it is a great methodology, gives you lots of flexibility, but they don't say increased likelihood of audit. So just be aware of what that is. But again, what we have done, what we suggest on it is keep it simple. So if you're going to submit your schedules, your calculations, whatever, keep it as simple as possible. We don't know if accountants are going to be reviewing this or not. And the way I explain it to folks is you need to be able to explain your alternative reasonable methodology to your neighbor who is not healthcare. So if you can explain it to them, hey, we had to do this. We had to adjust it because, Dr. Smith left in the middle of the year. Or Dr. Smith, or we launched an entire new orthopedics practice and hired 10 physicians in the middle of COVID. And so our results were actually a little better than 2019 and had nothing to do with COVID. It had to do with our new orthopedics practice. And if your next door neighbor who knows nothing about healthcare and provider goes, well, yeah, reasonable man standard, that makes sense. That's what I would do. But do not create, we accountants like to create Excel spreadsheets and fancy calculations and the percentage of this and the percentage of that. It will blow them away, confuse them, and they can ask more questions. So with anything you try to do, you're doing alternative reasonable methods, try to do as simple as possible. Because it appears they're putting in more ability for reconsiderations or maybe an appeal process. So I would give them enough information to make your case and then narrative to explain it. But don't give them a lot of fancy stuff. Let them ask for more if need be under this alternative reasonable methodology. Because I just think you're going to confuse them and send them down the wrong path if they don't know what's going on. Now, they do say under alternative reasonable methodology in today's period 1 guidance, it says if you apply for alternative reasonable methodology under period 1, you have to keep the methodology for the rest of the time periods. I don't know if that's going to stick because, sometimes system conversions, floods, whatever, only happen one time. So we're hoping that we can kind of move off of that going forward. But because they keep going back to 2019 as the base year comparison, that's pretty much why you might have to do option 3 the whole time. Okay, we talked a little bit about period availability. As you get the reporting time period, you can see we already supplied September 30th. Our next one is March 31st. The following one is September 30th, 2022, and March 31st, 2023. So lots more fun coming up. And please don't wait till the last minute. Your CPA will help you. And the other thing is don't plan to key on September 30th. Because if everybody's keying on September 30th, I don't know if the system can handle it, but also your CPA cannot answer all your questions at the same time. When you have 100 emails going, hey, what about this, what about this, what about this? Key it early, and then just save, and then go back and use it. So one of the things I wanted to show you is, one of the things on the provider legal website, the already filed, there was this financial summary that hopefully you could reconcile to and kind of look at. This is what HHS is kind of saying. This is a picture of what happened to your organization from January 1st, 2020 through June 30th of 2021. And these are the lost revenue by quarter. This is just an example that, based on the data you submitted, this is what shows up on that PRF financial summary. It was actually the middle box of that PRF financial summary. They calculate your lost revenues for you. The good thing is, the change they made is lost revenues are by quarter and not cumulative. So you lose in one quarter, say you lose $1 million this quarter, but you make it back $1 million next quarter, that's great. Because you can claim $1 million lost revenue and 0 in the next one. You don't have to offset, which was a huge game changer when they changed that and they gave us that additional guidance. If not, we'd be having a lot more funds being returned. Now, this is the other detail. And all I can suggest is, so that top part is basically to say, here's all the funding you received, and then the lost revenue by quarter, and then this reconciliation that they put together doesn't make sense, just so you know. As an accountant, it does not make sense. But the very first one would be, at have a G next to it, that $20,000 is the expenses you claimed under nursing home infection control. And then that 575 is unreimbursed expenses related to PRF. And then you have this lost revenue available, and then you have nursing home payments. There's a lot of dollars out there. But for some folks, it's confusing because what they show you is, say you had that example you had before, you had $5 million expenses or $10 million of lost revenue. They will show that you only were able to claim, say, $2 million of lost revenue, but they won't show you what's carried forward. And the current FAQs, if you have lost revenues or expenses, you can carry them forward, even if you didn't claim them during this time period. Or what happens if tomorrow you go home and you go back to your hospital and the hospital says, oh, we forgot to give you all these, I'm never going to say it right, redemptive charges, all these redemptive costs that we incurred for all these, COVID drugs. We didn't claim those under provider leave. And we have these claims, we have these expenses starting back in March of 2020, all the way through June 30th of 2021. But you've already finished period one, can you still claim them? Absolutely. Because the clock starts over every single time. So when you do period two, period three, period four reporting, you can go all the way back to January 1st of 2020, all the way through December of 2022. Essentially 2 years, more than 2 years of here's what all my costs are. So if you find something, or if your CFO is looking for expenses and you forgot to tell them about something, tell them, because you can still get claimed for it. If you have money, you can still claim. And lost revenue can carry it forward. And the other thing, this is an FYI, but I think pretty much all the funding was probably gone in this first round. Under the USDA emergency rural health, whatever, payments or fund, they were going to reimburse for lost revenues. We never thought they would, but they actually included lost revenues in there. So that I was interested. It's not a full reimbursement like provider relief, but it is better than enough. So in these last few minutes, we're going to talk about the next phase, the application that is due October 26th. That is not a Friday, I think it's a Tuesday. So don't just assume that HHS picks normal days to file the deadlines. Don't wake up on Monday morning and go, oh wait, I need to file something. You can't do this all at once. So it closed October 26th at 11:59 p.m. I'm assuming a lot of people are going to apply. It's not very hard to apply, and you're allowed to. It's not fraudulent if you submit an application because they just say, send us data. You're not telling them you need the funds, you're just giving them data and say, hey, you have funds available, send it to me. So even if, and we'll talk about the ARP, but again, October 26th, the problem is TIN validation. They say on the website that it will take up to 10 days to validate your TIN. We're not finding that. Most people are getting validated TINs right away. But you never know. You just never know what they test. So make sure you go in and get your TIN validated today, tomorrow, no later than Monday. So hopefully it gets validated, and then therefore you can then submit the rest of the information. Now, there is lots of, again, guidance, information, a sample application, instructions out on the website. It is way easier than what we had to do for reporting period. This application talks about patient care revenues and other things. Now, one of the things, again, this is just kind of an overview of the process, but one of the things that I will highlight is, they say they're going to take all this data. It's one application for 2 different pots of money. And they're going to take all this data and evaluate it and compare it to your peers, compare it to others to determine whether or not you should receive funds. I've included in the slides kind of how the payments will work. Under phase 4, note this is called, under phase 4, they're calling this a general distribution. So phase 4, if it's a general distribution, for those who know what general distributions are, we love them because any entity that receives that general distribution, you can share it all around your organization. The ARP, the world payment amount, is going to be, has to be used by the entity that receives it. So if you have multiple tax IDs and one of them receives that ARP payment, they're the ones that have to use it. It is not allowed to be shared. It is not a targeted distribution. It is, the control has to stay within the organization that receives it. You cannot share it. So, but under this provider lien, they are going to take Q1 of 2019, Q3 of 2019, and Q4 of 2019 revenues and expenses and compare them to Q3 and 4 of 2020 and Q1 of 2021 and see what happens. They're going to compare revenues at the net patient service revenue level, and they're going to compare expenses. Now, I was responding to emails this morning and someone asked, well, wait a second, do I have to back out of my income statement all the expenses I got reimbursed under provider relief? No, you do not. This is not, you're not asking for reimbursement. You are just asking for, here's my financial data. HHS, you provide me money if you want. It has nothing to do with the data you're submitting. It's just the data you're getting. You'll be getting funding that you'll be using in the future. And part of phase 4 will be paid a bonus based on your claims data from serving rural patients. You don't have to live in a rural area. You can have a hospital in New York City, but if someone comes from rural Vermont and is treated at your hospital and you bill Medicare or Medicaid or CHIP for that patient, you can get funded. So, very important to make sure that you identify all of the millingtons that should be claimed under it. Under the American Rescue Plan, like I said, it is serving rural patients. You do not have to be rural in order to get funded. Now, quickly under the schedule. The schedule, this very top part, 10, 11, and 12, has nothing to do with your current financial data. 10, 11, 12 is just a reference point. It is your most recent tax return or your audited financial statements if you don't file a tax. It has nothing to do with the data below, if that makes any sense. People are getting confused and think they have to add the numbers together. So that first part, it is just your most recent tax return or your audited financial statements if you're a government entity, you don't have to file, say, 900. Now, item 13, operating revenues from patient care. You already have this data. This is net patient service revenue that you just reported for period 1. You should already have this data. You shouldn't have to do anything with it. It's ready to submit. So that's the data you already have. The challenge is operating expenses from patient care. Everybody goes, oh my goodness, what are we going to have to do? We're going to have to do a mini cost report to figure out. Nope. Because based on the FAQs and everything else that we're reading and seeing, I think I should have been in here. No, I didn't. Sorry. There's been lots of guidance. So based on the FAQs and the guidance that we're seeing, they say it relates to patient care. They also answer an FAQ that says, well, what about finance and HR and IT and all those people that support our providers? They said, yes, included. Okay, so that means all of your administrative departments that are supporting the hospital or supporting your physician practice are considered part of patient care. Another FAQ says, well, what about intercompany rents? You know, that stuff that sometimes goes to the from. They said, yes, include intercompany rents if it relates to a facility that provides patient care. So the only thing you should be carving out of this is invested income or loss, non-operating gains and losses, and say rental income on non-kind of provider-based locations. And I don't mean to say provider-based, providing care locations. So it's only maybe if you had, you spend money on a Chick-fil-A location, that probably is a non-operating. Everything else, our stance on what we read in the guidance is included in patient care. So again, net patient service revenue, all your expenses, make sure your non-operating stuff is pulled out and you're ready to go. And you're ready to buy. Now, I would recommend, you have to submit supporting documentation, they talk about internal financial statements, other stuff like that. I would not just print your income statement and mail it to them, you're not upload it. I would take your income statement and make it pretty, create it out of Excel, here is only what you need. I would look like an income statement, but I would not add lots of stuff to it. You know, I would not submit Excel, I would submit PDF only. They don't want pennies, they want round numbers, they also said, but I would submit quarterly data, very specific. I would not show them all 3 months and add it together. Why give them more information than they are requesting? You don't send all your receipts to the IRS, you should send your entitled financial statement to HHS. Just an example. Now, question number 21. If you do not check yes here, I will talk to you. Question 21. Select yes if your organization would like to be considered for additional RFO payment. Would everybody like additional money for their organizations? Absolutely. Check yes. It is not fraudulent to check yes. The federal government said go ahead and check yes. You are not saying that you're eligible, you're just saying would you consider me. So everyone should be checking yes for that. I haven't come across any reason why someone would check that. Unless maybe they have too much money and don't want any more. All right, I know I talk really fast. I can probably talk for the last, 5 hours on this topic. As you can see, I get very excited about this topic. And I know some of you, this might have been the first time you've ever heard about provider leave, and it's probably the last time you ever want to hear about it again. But I am here if you have any questions. I think there's another session coming in here, but I have cards, information, feel free to reach out, email me, etc. And I appreciate your time and patience. Thank you.
Awesome. Thank you, Sarah.